Three aces. So what is the three aces? The three aces is an area where there's multiple confluence conducting of a minimum three. It could be a trend line. It could be a resistance. It could be a pattern. As long as there's a minimum of three confluences in one particular area that forms an X or three aces, it's a powerful indicator to get in short. And these are the trades that you don't really need to wait for confirmation, like the boomerang, where sometimes you need to wait for confirmation, such as you let the boomerang trigger, then you wait for a break of structure and you catch the retest. The only time I enter the boomerang is if there's a three aces there, because that's literally a go-to setup. So for example, you may have a bit of a channel, right? And in the channel, you might have a 1, 2, and on the third tap, what could happen is there might also be a pattern forming. So you might have 1, 2, we complete it, and there we go. So we've got one confluence here, which is this trend line, and then we've got the second confluence, but you need a minimum of 3. So there may be a bank level across this area, and here is your X. Now you've got an X, that's a minimum of 3 confluences, right? Now, that's one variable of the pattern, right? This is the three aces, it's a variable. A more powerful three aces setup would look something like this. Now, if you have, for example, again, a channel, so there's different variables. This is a valid three aces, but when you've got 3 trend lines, instead of 2 trend lines matching and a resistance, this way is more powerful. So for example, this is a valid three aces. A high probability three aces would look like this. So you've got your channel, you've got your 1, 2, and then here there might be another channel forming. So 1, 2, and then there might also be another pattern here. So for example, you may have something like this, right? So you've got 1, 2, and obviously 3. You've got 1, 2, and obviously 3. And you've got this mini pattern here, 1, 2, and then 3. This is the textbook three aces, extremely, extremely high probability, right? Minimum of 3 trend lines crossovers. And you can also have a bank level here just to literally just take it to the next level. So this is your typical three aces. Another example, you may have something like, so you may even have this, look, 1, and you may have the same pattern here, but you don't have to wait for a third tip of the largest channel. You can still have the same pattern forming here, right? And if you've got 1, 2, let's update this, and then another pattern here, for example, 1, 2, and then 3, right? And then 1, 2, and then 3, and then 1. And even this second tab, it counts as a three aces because it's a parallel channel and it's a dynamic resistance of the channel. So multiple crossovers. So you can have a three aces on a second tab of a channel and a three aces on the third tab of the channel. Obviously, the third tab is a high probability trade, right? And with this example here, where it's not really 3 trend lines, it's just 2 patterns, this is a decent valid trade, but the middle one's the high probability one. So let's look at some examples below and then just see what we've got here. So what do we have here? We've obviously got 1, 2, and the third tap. Fine. We've got 1, 2, and the third tap. So right now it's 2 aces. It's not really a valid 3 aces yet. Then we do have a resistance here. Okay, this is a valid trade, but it's not high probability. High probability trade would look like this, right? So this trade, for example, I would personally wait for confirmation or wait for a boomerang, even though it is valid. And if you want to take it, you'll probably make profit, but I suggest you backtest it and see if it's worth adding it to your trading plan. So for example, a high probability trade would look something like this. So let's just say the market is obviously within this pattern. And look at the difference now. So now we've got multiple trend lines crossing, right? So now we've also got this one, 1, 2, and 3, 1, 2, and 3, and obviously 1, 2, and 3. So this is what you call a very, very high probability trade. Okay, now let's look at a really, really, really high probability trade. So I'm going to do the 3 aces, but this time there'll be compression within double patterns. So we've got the 1, 2, 1, 2, and now what we're expecting the third tap, right? 1, 2, and 3. So if we do this, and then a mini pattern here. These are your go-to setups. Why is that, right? So if we implement this, we need to really zoom in just to show you guys how to do it properly, right? So this is the point of interest. This particular third trend line counts as the third tap. It's the zone. Remember, it's all about the zone. Doesn't have to be perfect. What do we see here? Look, again, another pattern. So we've got now 1, 2, and 3. We've got the 1, 2, and zone 3. And within the zone, there could be compression. 1, 2, and 3 within the zone, right? Then we also have this area here, which is the previous resistance, and there might even be a bit of an imbalance in the middle, or whatever it is in the middle. You know, this could even be up here, for example. Let me see from around down here, an imbalance in the middle. So you can have an imbalance, or you could even have a banker block. Whatever it is, you're gonna see some form of a confluence. But what's important is the zone, right? It doesn't have to be perfect. We've got the 1, 2, and the third. Look at the zone, multiple confluences. 1, 2, 3, and you've got the 1, 2, 3, and the mini compression within the pattern in confluence of the break and retest of resistance. So this is what you call the 3 aces. Powerful tool. And when you see the 3 aces outside of the pattern and you complete a boomerang, this is the golden A1 star setup. Now let's look at another example. In this scenario, we could also have a bit of a parallel channel, right? Simple stuff. What else can we have? We can have a pattern inside of the channel. What sort of pattern can we have? Let's say we've got an expanding pattern, right? We can have an expanding pattern such as this. Down here somewhere, obviously the market will look something like this. 1, 2, and then we can complete the 1, 2, and obviously a third tap. But then we could also expect some form of a third trend line tap there. So if we complete this, right, I'm gonna do it perfect in a minute. Just give me 1 second. Here we go. Look at the confluences, multiple confluences. So we've got 1, 2, and the zone 3. We've got 1, 2, and obviously 3. And we've got 1, 2, and 3. Typical 3 aces, extremely powerful tool. And normally what you'll see is on the way up, there could also be compression. That's even more powerful, right? Another example, there could be a break and retest of a trend line here, right? You know, let's do this like this. And if we, there we go. So this has turned onto something more than the 3 aces. This is like the 4 aces, but anything above 3 trend lines is still the 3 aces, right? But this is just a high probability trade, because now, not only have you got 1, 2, 3, 1, 2, 3, and 1, 2, 3, you've also got 1, 2, and obviously the break and retest 3, right? There may even be another trend line here somewhere that we haven't even spotted, you know, somehow. There might be a bit of a symmetrical triangle within a channel. So the more patterns that's in confluence, the higher the probability. There's so many variables of the 3 aces, but as long as you've got a minimum of 3 trend lines, it's an extremely high probability trade. And even within the zone, you're most likely going to get a banker block or a bank level or an imbalance, etc. And these are the trades that I would not hesitate to enter on a limit order, right? And obviously, if we get this particular pattern, all these confluences just a little bit above the channel, again, golden A1 setup, 3 aces and a boomerang. So hopefully this cleared everything for you guys on what the 3 aces is. Now let's look at some more examples.